So one of the reasons why I actually suggested, well, taking some more profit on CCL and also completely closing anything else so that we just have one runner of a profitable position going is actually, and I'm making reference to this chart a lot, and I've covered this in previous sessions as well, but it's this DXY chart. And this is also one of the new things that I actually wanted to cover this week, which is the Monday's range. This is a particular ticker which I've been looking at for quite a while, and I still suspect that this is actually on its way to run higher, more specifically to the high of last month. So earlier this month, we went below the low of last month, and now we're basically on our way to the high of last month. Now, why is that important? Because that means that whatever the dollar amount is that is in your portfolio right now, if this chart runs up, your buying power is essentially going to increase. So while I'm bullish on this, and again, I'll show you also intra-week here some things to look at, to kind of support the idea that I want to be bullish on the dollar, I want to cut any swing positions, any positions that are not immediately working for me, and really look at some fresh options. So we'll go over the DXY as to why I think it's a good idea as to be like dollar heavy, as you will, and to basically also then tie it into a Q3 watch list of equities that are high on my radar that I expect, well, to get some quite easy price action, hopefully, to just keep doing what we've been doing. So just to keep getting positions like the Robinhood position or the CCL position, and then to make sure that anything that is basically drawing down and that does not support the idea of that, well, it's looking good, I immediately want to get out of it, specifically because the DXY is looking bullish, like I said before as well. The low and the high that is put in on Monday are going to be important levels for the week going forward. Basically, right? And if I'm looking at the DXY chart here. This is once again, it's something that I've been talking about for many sessions on end. It's something that is weekly on my radar, and that, well, if this is going to run up higher, I once again want to reiterate that whatever dollar amount is in your portfolio right now, chances are that you're going to basically have more buying power at some point in the future when this is going to top out and roll back over. Now, something I was noticing that is immediately applicable here, that really leads to me to like closing a position like Neo with no regrets whatsoever, is simply noticing that the DXY has basically put in a low on Monday right here, a high there. And once again, we can look at this on whatever ticker we want. And at some point later in the week, we actually broke above Monday's high, made a new higher high. And I see that today, actually, we were coming down into Monday's high. We spent some time below it. And now, after spending 2 1-hour candles closing below that Monday's high, we're now getting back above. Now, whether you believe it or not is not really important, but this exact scenario, right, with this circle was something that I was looking at this morning, actually a bullish retest on the Monday's high. So once again, this are 2 pivot levels. Essentially, for later on in the week, they're also just 2 horizontal levels, right? So what is not bullish is, well, once you get above that Monday's high, at some point in the week, you get back below that Monday's high, you end up turning it into resistance, especially if the liquidity at the other side of the range is not taken yet. Oftentimes you will see a move back all the way back to Monday's low. But what is bullish is exactly something like we're seeing on this chart right now. So it's not even just about the DXY and the implications, but also just, well, say you see a chart like this, what do? Well, the Monday's high and the fact that we're holding above it is interesting. One more thing that is interesting, and that also links into things that I've priorly talked about, is exactly when we got below that level and when we got back above it. So on the lower time frames, I was actually specifically looking between 10 and 11 a.m. New York time for a reversal. So I had this marked out, and again, linked to one of the prior sessions, and also mostly the live trading on Wednesday, where we continuously go over looking for, at least if we are going to day trade, a setup that is taken between 10 and 11. So what do I see on this chart? Well, we've broken out earlier this week, and now we're holding Monday's high. And this is really a very good example, once again, of what is called a deviation. So if you look on the 1-hour time frame, get below it, close below it, there is no immediate reason here to believe that price is going up. And the second candlestick essentially also closes below it. and then that third candlestick pops back above and closes back above. At this point, right, my idea, and this is relevant for everything that I'm going to do across all marketplaces, whether it's Forex, crypto, or equities, is that I believe the dollar is more likely to run up at least 0.6%, which for the DXY, that is a big move into last month's high. And that basically means that, well, if the dollar is going to move up, structurally, things are probably going to have a hard time really grinding up higher. In fact, I would want to look at some setups that would imply equities coming down and giving me an example just like this, where we get below a level of interest, get back above it, and then play long from there. Such as, for example, the night chart. So I saw that they have their earnings tonight, and I'm going to be covering that. So that is one chart that I want to link to this, but really, I hope that makes sense. Just looking at this chart to give me, like, once again, no problem in cutting any position that is not just working for me. So if I'm looking at a portfolio and I'm seeing multiple positions in there, I'm really asking myself the question, does it make sense to hold on to this? Is this something that is going to be productive to, well, having a good P&L, or is this really not helping me forward right now? Always remembering that you can always try something again. I'm a very big fan of cutting a loss quickly and then trying it again. For example, the trade idea, maybe twice. As a general rule of thumb, I've also said that many times. Very often we get an entry criteria and then it does hit an invalidation. Well, if the same entry criteria aligns up at that same level, I will often play the idea twice, but I'm not fine with holding things down red to the point where, well, like I said to Duck as well, a lot of people can actually get a streak going in trading, have multiple wins on end, and then typically there's something happens like 7 out of 10 or 8 out of 10 is actually green, and then actually the losers undo all of the essentially good work. Now, ideally, obviously, you have a positive hit rate and a positive P&L. But at the very least, having a negative hit rate and a positive P&L is way, way better, of course, than winning 8 out of 10 of your trades and then actually having horrible risk management and just not applying, well, sound logics to the markets. So All right. So entry one is move below 88.66 and then closing a 4-hour back above, right? Stop loss on the low that is made below 88.66. And at that point, if I'm thinking, well, what am I going to target from there? Well, I'll look wherever it is that I'm taking an entry, wherever it is I have an invalidation, and at the very least, well, I would want to see typically a 2-to-1 risk reward trade. But I'm also just looking here at what would be good targets for this. So I would say if we get back above it, first target could be, I would say 96.22. Second target, well, I'll zoom out a little bit on the monthly to see it a little better. So we can play to 96.22 first. Second target can be the highest level, so that the top end of that bearish fair value gap, which is 99. And I would like, I mean, at that point you're up 7-8%. We're probably that is enough for that position with what is probably going to be a tight stop loss below 88.66. So really, let's say 96.22. That is a target, and from there we'll basically keep updated. It's all also going to depend on, well, how we come down here. So it's more important that you already know, well, what would be an entry for me. But to give as clear of a target as possible, I would say stick with 96.22. Then second entry is getting below 82.22 and closing a 4-hour back above. Stop loss below the low that is made below 82.22. And let's see, well, if you're breaking down levels, a very logical first target, right? If I'm having horizontal levels of interest based on my monthly time frame, well, the first target for that is going to be 88.66. So basically that broken quote support level then turning into resistance. So looking at something like a 7.8% upside and maybe something like a 2% risk on that setup, which does not mean 2% risk on your portfolio, but at least that would be the idea. Then third option would be move below 71.37. So you can also see that there's a big gap between these two levels. That literally means that stems from the fact that we had a huge wick there on the monthly. I kind of want to show that here on the 4-hour. You see a lot of gaps here. That was a big wick on the monthly time frame. So that is something that is leaving behind a big area where I'm essentially not interested in doing any business long until we really hit a significant level lower down, which is very specific, the midpoint of that gap, which is also something that honestly, well, that is an ICT concept and an ICT idea, but not many people are aware of that. So getting below 71.37, closing a 4-hour candle back above, stop loss below the low that is made below that 71.37. And well, a generous, nice, good target for that would be 82.22, literally the level above you that was not held then, right? And for the lowest option, I would say, well, getting below 60, closing a 4-hour back above, then stop loss below the low that is made below 60 before closing back above. And your first target could be, well, 71.37. So the lower we go, actually, the more significant the bounce is probably going to be that we're going to get from those levels. So it's a warm welcome to not oversize on the first levels here. And at least for you, Doc, I would stick with 1% risks here and here. Now, if at some point we're coming lower down and we really get a good setup, maybe at some point we'll decide to risk more than 1%, because at some point, the lower you go, also building up bullish divergences over time, it's going to depend also on the way how we come down, but especially if we're coming down in like an impulsive way, leaving lots of fair value gaps behind, then there's a likelihood that we're really going to see a good move up again, which at that point, especially if your portfolio is already with a profit buffer, we can maybe look to risk even a little bit more as we go lower, because you can also see that the target one is always a bigger percentage move. But does that cover where you need to know where you need to enter, put your stop loss, and then the first target at the very least? And as a general rule of thumb, right, at the first target, you're out 75%, and with the remainder of the position, will basically keep updated from there, right?
Yeah, no, that's perfect. I just have one last question on this stock. The you know, on the off chance it goes up and we get that the
Yes.
99.05. So you're looking for a 99.05 monthly candle close above that
Yes.
level. And then
Yeah.
what's the criteria after that?
Well, then the criteria actually would be getting below 97.64, closing back above it on the 4-hour. So we would first need to see a monthly candlestick to close above 99.05. That is the first thing. Until that happens, there's nothing to do to the upside to chase price to the upside. When that happens, we treat that level exactly like these levels below us. So we would need to see a move below 97.64 and a 4-hour candle close back above. And at that point, let's see what we would be looking at. Well, a good stop loss for that would be actually 96.22, which would be the bottom of that area. That at that point that wouldn't need to come back into play. And targeting to, for example, when I'm looking for a target, right, on the 4-hour time frame here, I am noticing that way back there, we're actually coming down. And what are we doing here? We're leaving behind a fair value gap. And we came very close to it, but we've not ever came back into it to refill any of this inefficiency. So really pointing out to this here. So if you ask me what is a good target, well, a good target is to play to something like this, equal highs lining up with the bottom of a fair value gap. So good target there would be 102.7. Now, kind of want to see again 102.7. If I see something like this, right, I can add in a line just for a moment to give me a low time frame idea and at least an execution time frame idea of a good target. 102.7 and kind of just visualizing in my mind how that would need to look. So I would put my stop loss, let's say, let's do 95.98 for a stop loss wherever we close back above 97.64 as an entry. And then a good first target, I would have then well, a conviction that I want to play back above 100 and then 102.7. Like again, this little detail where this candlestick has not tapped 102.7 is interesting to me. That means that there's liquidity here from our fair value gap lined up with buy side liquidity above this high. And that is something that is very likely going to come back into play at some point. So from 97.64, if we get back above it, let's see, that's a decent move. But you can see if we're going to play from higher, our percentage move is going to be less percentages. So if we get lower down, I actually am more interested. Now, that's not to say that we won't play it. That is also perfectly viable. Awesome. I love this so much because this reminds me a little bit of what we've done so far on Robinhood. So far, Robinhood has been one of the two positions, Doug, you know that as well, that really helped out that portfolio so far because I believe we played it to 23.74. That was a very high conviction, well, target. And I think for Snapchat, we're probably, well, it's looking good. So indeed, like you say, Porter, if we just look at the quarterly time frame and also just spending some time just reiterating basic concepts, like there's three ways how we can close a candlestick. We can close it bullish, bearish, or neutral. We close a candlestick bullish if we close above the high of the prior candlestick. So for example, right, what I'm immediately looking at for Snapchat is, and also what I'm looking at here is evidence that we've seen a bottom and then a perspective to go higher, and then where are we going to? So evidence that the bottom is in, I see that, well, on multiple, well, you can look at multiple things. One thing that I'm looking at here is, well, we closed above that high of July. Well, that was Q3 2023. So Q4 2023, we closed above the last quarterly high there, which actually for Q1 of 2024, the bias would have been that we're most likely to trade back into that Q4 high. So a candlestick that closes above the prior candlestick, the bias on the next candlestick, as this is closing bullish, is that it's most likely that we're getting drawn back into the high. Now, if I'm just reading candlestick per candlestick, and that's really an important skill to do, just this closed bullish, left liquidity behind there, and on the prior quarter, so Q1 2024, we haven't met that bias yet of reaching the Q4 high of last year. But that doesn't mean that we're not going to make it there. So just looking from a candlestick perspective, that candlestick with that high, which we closed above in Q4 2023, Well, that Q3 2023 candlestick is a bullish order block that's confirmed by closing above it. And basically in the previous quarter, it seems to me like we actually retraced back in that bullish order block. And this candlestick, the way that it closed is neutral. Neutral because it did not close above the high of the prior candlestick, but it did also not close below the low of the prior candlestick. So neutral candlestick. Now, if I'm looking at this candlestick, now Q2 2024, I see that we've actually picked up the liquidity, so the low from last quarter. And I'm really just treating this as a range, which to me, it looks indeed like we're super likely getting drawn into the high of the Q1 of 2024. And then by extension, a very good target would be 17.9 here. So my idea here is very much in line with I want to find a long position. I have a high conviction that we're going to get to 17.9. Now, if we're going to get higher than that, what's going to be the next level to look at? I would look at the midpoint of this bearish monthly fair value gap. So that would be 20.43. I think that's going to be a good second target. 20.43 is the midpoint of that bearish fair value gap. And then the high end of that bearish fair value gap is 24.32. So I'm completely indeed in line with the idea that there is nothing to short here. And that indeed, it's most likely that we're getting drawn up higher. But now I would need to see, well, from where would I want to play? Well, that high from a couple of months ago here, it just seems to me like that is lining up with the midpoint of the body of the prior quarter, which if we're going to close above it, that's also an order block, and that would be the midpoint of it. So if I kind of verify that with FIPS and see what is the middle of the body of the last quarter, I see that that is actually 14. Once again, what do we do if we have two levels that line up closely together, such as 14 and then the high of Q2 2023? It would be to take the lowest of these two levels, which in this case is 13.89. But we can also play, for example, from the open price of the prior quarter. So there's no guarantee that we come down all the way there. If we're going to close above the open price here, that's going to be the top end of a bullish order block. So that's an option. This is an option. And then I would look on a lower time frame. So quarterly to monthly, weekly, or daily. Let's see on a daily time frame. So let's see. That 20.43 and 24.32, those are targets. But before we get there, 17.9 is probably the first order of business here. So what would I like to see on a chart like this? Well, we're now seeing multiple green candlesticks, right? So ideal scenario would actually be if we get and fall back into this bullish fair value gap on the daily time frame and then hold that and do something like this without going higher. So to long here, I would really want to see Snapchat not just rip up to 17.9 in one straight line. If it does that, it's going to be essentially impossible for me to long here and to cover my stop loss in a sensible way and to target to 17.9 first. If I long here, the 17.9 is a 6% move, but drawing down into this fair value gap is also already like a 3.5% move. So I would want to see exactly essentially this, and that level or that 1652, keeping in mind that that is the open price of the prior quarter, right? And if that is an important level on the daily that is here, that is the first trading day of the year for the stock market, that is also the yearly open. So that's a level. Actually, this is something what I would like to see. Snapchat getting essentially back below 1652 to fall back and to retrace into some of this bullish fair value gap. And then if it can get back above 1652 to long it from there on the daily candle close back above 1652 at that point, right, to 17.9 and then to 20.43 while covering my risk with whatever the low is that is made here. So I would like to see a higher low here, then getting back above 1652 and then playing it from there. If that is not going to happen, right, at any point, I'm going to be interested if Snapchat comes down lower into 1389 or into what I had lower down here, which that big green box is an order block from last year, essentially. So on the daily time frame, I would say the option here or the option here is essentially what I would play. So there's just no sensible way, I would say, to long here at market price. Came back just in time for Snap. I heard you were in a position on this, sir, and this is a very good looking chart on the quarterly time frame. CRM will also take a look at that tick. And Duck, are you still here? I also need, of course, to give you your exact entry criteria for Snapchat, right? Or unless you've already got that.
Looks like we got we're using the daily candles strategy. So 4 hours at 1652,
Yeah.
targets 1790 and 2043 using the typical stop loss strategy.
Absolutely. And if we do draw down lower, which again, I'm not saying this is now the most likely thing, but I am saying if this draws down lower, I am not interested to buy here anywhere until we get below that quarterly level of interest. It's not that price cannot hold there. It's just, well, it most often doesn't, and it's not optimal to what I want to see. But yeah, this looks like it is very similar to Robinhood in the sense that, well, a chart looking good, making higher highs and higher lows. I'm now trading here. I'm aware that I'm leaving behind a bullish fair value gap on these prior days, which runs from the high of June 2024, June 24th to the low of June 26th. So that could give me some daily levels of interest, right? So whatever you have there, Duck, please keep that. But this is where you could then say, well, I have a combination of a quarterly level of interest with a daily candlestick confirmation, or also I find this a very interesting chart. I also actually have some daily levels of interest, which I could, for example, look to play intraday, for example, with a 15-minute candlestick confirmation, which this untested bullish fair value gap, right? 3 important levels in that: top, bottom, and the exact middle of it. Let's put on my 1 fib here. That is, so we have 1631, 1605, and 1579, right? These 3 levels would be levels that I am interested in. For example, on a 15-minute time frame, for example, and this now I could get very, very specific with what I want to see. So we're currently, it's Thursday, tomorrow we're Friday, tomorrow between 10 and 11, or already on Monday here, for example, between 10 and 11, which once again, that is the New York AM kill zone. If you're going to see any place, well, you can of course trade whenever upon bullish candlestick confirmation. That doesn't depend, but if you do something intraday during these time zones, that is what I would want to see. So for example, right, playing from daily levels of interest now on the same exact chart, I have my blue level here, which I am very well aware still of what that is, right? That's a quarterly level of interest. Get below it, close the daily back above, and start creeping up from there. Now, lower time frame, we might very well drop lower. And it's not because we drop lower, I am still interested to play the long part on this particular ticker, right? So what I could look for example, is a move below either 1631, 1605, or 1579, and then basically getting back above that level, more specifically, for example, between 10 and 11 a.m. New York time, where I'm treating these levels exactly like my high time frame levels, as levels of interest below me, where I want to get below it, get back above, and preferably, just because I really want to emphasize that you should want to do business only on your own terms, right? You can be as specific as you want to be with it. I can go to the market, I can say, well, this is exactly what I want to see also during this period of time, right? That could be something to play. And then intraday or day trade would look something like from 1579 into, for example, the level above you, and something on lower time frame to basically play. Now, you can also risk 1% on your trading portfolio on lower time frame trades, but generally speaking, if you're trading your swing trades with a 1% risk, I would make a good habit of playing your lower time frame trades with a smaller a smaller size, and essentially half the risk or something like that. So 0.5% risk. that is just an addition, how to find these daily levels. And again, that's just very simple. We've just left essentially this whole, the 3 levels to play from, and you now also know what is the ideal time to play from those levels, so time and price. Also see in the chat, I hope that is clear for Snapchat. I think you have it also, Duck, at least our swing options there. We can take a look at CRM. This is at least an interesting monthly candlestick, which is this going to close bullish, bearish, or neutral? It's a good question to ask yourself. Actually, this has a lot of price history, so it very well makes sense to look at our quarterly as our high time frame. This is going to be interesting from a quarterly perspective because we actually saw quite a wick down. But if we are specifically going to close back above, I would say, the low of last quarter, then at least this quarter, even though we went very low, actually just ends up closing as a neutral candlestick. If we're not going to close, that is, below 249.84. So I would say that is an important level at the end of the month to close back above, to give this really some conviction that, well, maybe we are going to trend back to the upside. And in the bigger picture, again, I can go to my log scale. Where could this potentially go to? Well, if this is going to break above its all-time high, this would be a very good example of just a chart that is in price discovery. So that would have potential to run to the 1618, 1272 extensions at least. So that would give potential to 398.57 and 544.79. At least that is that is a chart that is looking decent. Well, more than decent. In its whole entire price history has basically been trending up. Now, this is a very interesting quarterly. I would really emphasize the importance, I would say, of closing above 249.84 this month. If we are not going to close above that, let's see what would that mean on the daily time frame, right? So quarterly levels, we can go to the daily time frame to further elaborate. I can mark out here also where the next quarter starts. That's July 1st, so that is essentially next week. We should not be closing anymore, and it also does not look like we are going to, but still we only know for sure when it actually does close. We wouldn't want to close anymore below 249.84. So I'm going to quickly just redraw these levels, the low of last quarter. Also want to keep in mind the high of this candlestick because that is the bottom end of the fair value gap. Want to keep in mind the previous all-time high and then further elaborate from there. So this exact level, that 249, I want to highlight that one as an important one to close above, like I said, at the end of the month. That also means, right, I know that that is a very important level to close above. That is actually last quarterly low. So on a daily time frame here, this would seem like a level that if we are going to close indeed above it, this looks good to me. To the point where, yeah, that is something that has been trading in a high time frame uptrend. So potentially, if we get a nice bullish close above 249, a good option here would be for price to essentially then get back below 249.84, make a higher low there, close back above, and essentially treating this as an uptrend again, where we're making low, a high, a higher low, a higher high. So being open to the possibility at least that this is going to form another higher low, and then basically trading this into that previous main swing point, 311.75, with the perspective actually, and this is a very good chart because it is, for example, right, in earlier stages than something like MU, where MU has by this point broken out previous all-time high, has ran to the 1618. At this point, I'm not saying that's cooked, it's probably still at some point going higher, but that's reached some impulsive targets. This is something with really a lot of potential. So I like the idea of playing from that 249.84 level. Get below it, close back above it, and then we take a position from there. And I'm looking for, well, I'm actually going to kind of mark that out a little bit. And what I often also have elaborated on frequently is using that long position tool, or that if you are playing both sides of the market, using that short position tool to kind of see how that would look. So getting back into 249.84, really, I think something like this, right, would be approximately what I'm aiming for. It all depends on where I'm going to close back above. So that might very well be something like this. But essentially, right, this is going to be a key pivot to play from me. Last quarterly low, get back below it. In the next 3 months, get back above it, and then do something like this, like I said. So on the move below, nothing to do until then we close back above that 249.84.
What time frame for that?
Let's see. So these are quarterly levels. So 3 time frames lower is the daily. So that would be a daily candlestick close back above 249.84 after first going below. So also that would really just mean we end up taking out anybody with a liquidation below 250 and then we close back above it. So trapping breakout traders, stop losses, liquidations below 250, then closing a daily back above. And I would say, right, the stop loss for this, at least for now, I would say we can put that on this low. So if it's going to look like, yeah, we're coming back there, we can always close it earlier. But this would be really the position that I'm looking at, targeting 311.75, so that prior main swing point, and having a stop loss below 227.77. That would be the stop loss and the target for that trade. And the entry criterion is then, yeah, indeed the daily candle close back above that 249.84. If this is going to draw down lower, though, we will have to reassess. But for now, that's going to be essentially the only option that I have for this. If it does something else, we will. I'll also put that on my watch list. By the way, this is a chart. Really, thank you for the recommendation. Also, Snapchat also a very good one. So I love it when this is an interactive process of you guys are also looking at the tickers that I have not necessarily seen myself. And this is how it very often goes. A lot of these stickers on my watch list, I only really got acquainted with them over the years because people are pointing their attention to it.